what you think is fake turnkey versus real turnkey versus what integration becomes. How would you say that?
So let's start with what we call fake turnkey. There are a lot of operators out there that may claim to be turnkey who may sell you a single family rental property. But here's what I think fake turnkey is. There's a whole lot of operators who don't actually own the assets that they are selling. They may talk to you as a potential client. You may say, hey, I want to buy properties with this criteria. And they may say, okay, great. Now let me go on to the multiple listing service and go and try and find that property to suit you. And then let me put that property under contract and try to basically kind of like be a middleman without actually owning the asset. Can you see how that might create a situation that doesn't go smoothly for the end client here?
Yeah, sounds like somebody that you're like dating and they're telling they can do something for you for the next 30 years.
I wasn't going to go the dating reference, but I think there's a lot of things that could go wrong there, right? You know, if you don't actually own the asset, you got to think, why didn't you own the asset?
Yeah.
You might not have had the money to be able to buy the asset. You might not have had the confidence to take that risk to actually own the asset. But either way you shake it, if you're buying properties from somebody who doesn't actually own the asset, you don't know that that asset is actually going to be sold to you because they are not the decision maker. The seller's not the decision maker, right? Or the turnkey company's not the decision maker. And even if that property does want to be sold, can you imagine? I don't know if you're very familiar with this. I don't know how much we've talked about this on the show, but there are so many things that happen from the point that a property goes under contract to acquire it, right? Like JWB to buy a property, which eventually will become a client property. From the time we go under contract to the time that we close on the house, there are liens to negotiate. There are challenges with title. You might have to get people to sign things that didn't know they needed to sign on the title. You might have to go and scour the country to find them. I mean, the amount of closings on the buy side when JWB buys properties that sometimes don't happen because the seller doesn't follow through on actually wanting to sell, or it just gets delayed a ton of time is really rampant. So you don't want to put yourself in the seat of trying to buy a turnkey asset that you want to be passive if you're not actually talking to the person who owns it. If it's just a middleman, that's what we would call fake turnkey.
Fake turnkey. And Charity is asking, that's different from wholesaling, right? Charity, if I'm listening correctly, wholesaling is a part of every equation, right? Like the wholesaler is the person that's looking out there, looking for properties and then getting them to investors. Here it's, you know, is the wholesaler representing themselves as a turnkey provider versus, you know, is there a wholesaler that's out there selling to somebody like JWB that has been buying it before, already owns it, and then is then going to buy for you, right?
Yes, inherently, there's nothing wrong with wholesaling. JWB buys properties from our partners in the real estate community here in Jacksonville. Some of them are what we would call wholesalers. They find properties undervalued and then they sell it to JWB. JWB then renovates or builds that home and then, you know, of course, creates the turnkey experience and the vertically integrated experience that we have for our clients. So there's nothing wrong with wholesaling. There are different ways to wholesale. You can buy the asset and then turn around and sell it to a partner like JWB. Or as a wholesaler, you can just simply put it under contract and then flip the contract to JWB. We're okay with all that because we are an investment firm and we're okay if the delays happen or if something happens. But what you want, if you're investing in passive income, single family rental properties, you don't want to deal with any of that. You just want to make a decision to buy the asset and you want it to be purchased.
Yeah, you don't want any surprises. Right?
You don't want any surprises.
Yeah.
We are here to deal with surprises and we have to deal with surprises when we buy from wholesalers. But that's not what you want. So there's just a little bit of differentiation there.
So that's fake turnkey. The fake turnkey doesn't actually own the asset. They're basically saying like, yeah, I got you, dog. And then hopefully they're going to show up with it at time of closing and the property manager and whatnot. And then there is the run-of-the-mill turnkey, GC. So what is it? How different is it in acquisition side?
So the differentiator between fake turnkey and real turnkey would be, do they own the asset? So fake turnkey, they don't own the asset. They're just a middleman. And that's very, very rampant. So ask that question before you start to work with what you believe is a turnkey company. Now, what is turnkey as far as the acquisition part of this? Well, that would be somebody who owns the asset, but they're largely just thinking month to month with acquisitions. The way that this results for you is you might come to that turnkey operation and you might want to buy that property from that turnkey operation, but you might have to wait a period of months. And this is very common. People have to put down binder deposits or some sort of financial commitment, and you basically lock yourself into working with that provider. And you're waiting for that provider to actually supply the inventory. Then the supplier goes out, puts something under contract, closes on the property so that they can actually deliver on the promise to you and actually sell it to you. But it takes time. And so a lot of times you have to wait and your money's not working for you. And what's almost always the case if you're buying what I would call just turnkey is you have to wait until your home is rented. Many times you're going to close on that property that you bought from that turnkey operator, but that home may not be renovated at that time and almost always is not rented to a resident. And if it's not rented, it's not collecting revenue for you. And so this is very common in what we would call the turnkey space, right? It's turnkey, meaning they can sell you the asset pretty quickly and pretty easily. But as far as the return on investment, it's not as great for you because you might have to wait 2 months, 3 months, 6 months maybe to actually receive income from your investment.
Got it. Okay. So then what is vertical integration?
Vertical integration is what you get when you work with a company that has all aspects under one roof when it comes to actually acquiring assets. And they are thinking not just month to month, they are thinking years in advance to make sure that there is a runway of inventory available for you and all of their clients. And they may be acquiring land years and years in advance, like JWB has done since 2011. Like, for example, JWB owns 3,000 lots that we're in the process of developing. And every year when we sit down in business planning, we say, okay, how many of this inventory of lots that we're sitting on are we going to build this year to meet the demand for our clients? So we already own it. What this does is allows for you to always have inventory, a runway of inventory for you, because if you're a JWB client, you're on a buying plan and you're on an investment plan that, many clients are adding 1, 2, 3, 5 properties a year. Well, you want to know that those assets are there for you. So it allows for you to do that. And then one of the best things that can happen for you, especially if you're a new investor, when you're buying your first turnkey properties, is that they're already rented. And so almost without exception, JWB properties are rented at the time of sale. It gives you a lot of peace of mind and cash flow positive from day one. And that's just normal course of business with JWB because of the vertically integrated approach. And you just don't see that in other places.
So what I'm hearing essentially is this idea, I guess the umbrella theme that I'm thinking of when it comes to acquisition is the strategy behind it, right? Like if you're working with a turnkey, like a regular turnkey, they're just kind of like buying inventory to sell inventory. And that means that if you have a strategy to build a certain portfolio and we get into like an economic time where, inventory is really low, like we are right now, and we were in, kind of like during COVID and stuff like that, you may be delayed and your strategy might get disrupted. But with a vertical integrated company, because they are, creating this like assembly line of like lots and things under construction and whatnot, they're able to keep you to your strategy to a certain extent. And on top of that, I would also layer on strategy wise, I would assume that a company that is buying just in time inventory to sell doesn't have the luxury to really be like, you know what? I'm going to just dominate these 4 neighborhoods because, to really look for the pockets of neighborhoods inside of a city or in whatever markets and really be the person that has the best inventory there because they are, more beholden to like moving the inventory as opposed to like sitting on it and being able to supply it and creating that line. Is that accurate as well?
Yeah, I think so. I mean, you can be a whole lot more strategic when you are not in a need for inventory.
Yeah.
Right? You can keep your acquisitions costs low, which help to increase home price affordability for our investors, as well as our residents, those who are renting from us, because from the ability that you have to buy years and years in advance, the cost basis of those lots is a lot lower than what it is today. And we're able to pass along those savings to our clients, and ultimately that affects rents and home prices for the Jacksonville community at large. So let's just wrap all that up. When you're vertically integrated, when you have the connections, the ability to acquire, you have the lending lined up so that you can put tens of millions of dollars into inventory years in advance, you're in the driver's seat and you can create a wonderful experience for a first-time investor, especially coming into this asset class, where you can serve it up on a silver platter. It's ready for you when you're ready to make your decision. It's ready for you when you're ready to grow your portfolio, and it's rented at the time of purchase.
Got it. Cool. So Fake turnkey means the person selling it to you does not own the asset. Regular turnkey means they own the asset, but they're just buying on demand at the time of purchase and then getting it to you. Vertical integration means you're working with a provider that owns the assets, sits on years of runway, and is like more strategic in how you can build your plan and also how they can deliver these assets to you in an efficient, economic way and set you up to succeed.
There you go.
Let's go.